Good weekend, all. Ira Epstein, and here we are with your weekend edition of your financial market wrap-up. And this wrap-up is for Friday evening, the 9th of February, 2024. It's the market that never ends going up, the stock market. It started with the AI stocks, the Mag 7. They're probably down to a Mag 6 because there's nothing magical anymore about Tesla. And now it's shifting out, and when you carry a whole market, eventually it broadens, and that's what's going on. You're getting some broadening here. Nothing goes to the sky forever. This has been a dramatic rally, and I just warn everybody, yes, it can go higher, but you've got to pick your point of entry because you can get in trouble very fast in this market. And what you want is a correction. You don't want this. You want to see pullbacks. You want to see normal corrections take place. Then if the market wants to keep going, fine. But as I said, you got to be careful. Though there's going to be a number, whatever that number is, where the market gets overdone. This always happens. So things you should be watching. Keep your eye on energy. Venezuela is getting quite aggressive towards Guyana. And they're moving their troops. There's easily 600, 700,000 barrels a day of oil that's at risk here. That's a lot. And you could suddenly see what's going on. So if you've been wondering why the oil market's suddenly been coming up, I'm giving you the story. I'd written on it over and over in my newsletter that Venezuela is getting quite aggressive. They're broke. And it's very easy for a country that size to say, well, that's not your oil, that's my oil. And basically, it's foundless. There's no claim to this. But Maduro's doing a lot of crazy things. He made a deal with the U.S. He's not living up to free elections. Now it appears there might be a land grab. You got to keep your eye on all that. Just what the world needs, another problem. Dollar, very stable, as many of the currencies are just sort of marking time right here. But why don't we take a look and get a feel for where we're at? The first thing that's important is you got a 5 in front of the number, an all-time high close. That is something to be talked about. I mean, you're at 5,000. Now, 5,000 is a big number psychologically. Is that going to be enough of a number where the market starts in this area? You start seeing it falter a little bit? It would not surprise me. Big numbers often attract that. You can see on the weekly chart how you've come up beautifully through there as well. And look at this run. Now, this is the end of October. This market hasn't looked back since then. This is unusual. This happened in the 70s, and you had a run similar to this. And I'm not saying it ends bad. I'm saying nothing grows to the sky. So if you're not in and you're playing futures and you're not careful, you can get stepped on if you're not coming in. Buying rallies, very difficult, and you got to define what a rally is. You have a pattern of higher highs, higher lows. You're at an all-time high. You're over all the key moving averages. The resistance is the upper Bollinger Band at that next objective. Right now it's 51.41, but when it reopens Sunday night, that number is going to jump. It could easily be in the 51.60 to 51.80 area. Depends where the market jumps to. You're getting close to that 5,200 zone that even the outliers for this year, those were their numbers. So we'll see where the market goes. Are we embedded? You get a move like this, of course you're embedded. So it's the deep breaks that come out of left field that the Johnny-come-latelys, could be you, could be me, want to come in on the break. Buying this rally, very difficult as it is right here. When we come to the Dow, it's moving along with it. You weren't up today. You can see the futures finished off the week, and that's the way to say it for the week, down 17. It's a stall. Nothing wrong with that with an embedded reading. And again, until these embedded readings are lost, and I showed you this yesterday, you want to be buyers on breaks. Get a reading under what would be 79, and then I'll call for more of a sustained break in the market. Not a bear market, but it's more of a sustained break. In the NASDAQ, we're making up to levels we haven't been in 3 years. Right up through here, now we're over the 18,000 level on a weekly chart. I mean, it's just gone. You do realize that the people that work for NVIDIA and those of you that have owned the tech stocks, you're making a heck of a lot of money. Do you know how to take money off the table? Do you know how to write options against it? Some of you should learn that. You're not going anywhere in the Russell. I know it's up. I know it's up for the week 2.5%, The others are at highs not seen in years. You're stabilizing in this market. But this is what happens when you get broadening. And this market can come alive with that broadening effect, because eventually what happens is the money will say, well, we shouldn't chase the Magnificent Six. We can buy other companies, but what about these other companies that are here? I don't think interest rates are going up, so it probably is not going to get hurt by interest rate plays, and they start getting a look-see, because a rising tide lifts all ships. You know that. When we come to the 5-year notes, you can see the correction is underway. The market, it is Fed member after Fed member saying no. It is not time to raise interest rates. Some are saying what I have been preaching. You can't have this type of full employment, falling inflation, and say that the Fed should be dropping interest rates. Why? What does that do except bring back inflation? So that story is being mentioned by many of the Fed members, not one or two, not just a person here and there. That is the question. Now, as we get to new jobs reports and so on, and we see that there could be weakening, fine. But 32 to 34,000 jobs let off in the tech area is not 300 or 400,000 jobs. Those people are going to be gobbled up very fast by smaller tier companies that can afford them. In the 10-year note, same thing. You seem to be falling back to the 18-week average of closes. You're not trending in these markets. They're just in the neutral zone. In the dollar, you're in a key resistance area. Does that mean it has to stop here? Of course not. But so far, this was a bear market rally. Why? Because you've been under most of the time the 18-week average, you rallied up to it, and you stopped right there. Now it's got to prove if it has another leg to it or not. In the euro, you went down for the first time in a while. You haven't been under this number back to November. You haven't been under the 18-week average of closes. Okay, we'll see if it can stay under it for any length of time. If not, you can get a flip-flop of these markets. In the Canadian dollar, this again is a market that's had a bullish bias. It's been over the 18-week average. It got into a correction. I teach you here over and over that the first challenge of 100-day average in Bollinger Bands is big resistance. It's where the other guys that you shouldn't be one of them. It's going to the moon. It's never going to stop. You do get moves that go like that. Look at a cocoa chart, and you'll get a feel as to a market that can run like that. But all good things do come to an end eventually. In the Japanese yen, well, we keep hearing the Bank of Japan governor, Mr. Ueda, keep saying one thing. When we decide to move away from negative rate policy, it'll be a very gradual process. So this market coming down, are you paying attention to the Nikkei stock index? It's on fire. It's got the benefit of a better economy. What's going on now? To attract people, they are taking wages up, and that is what the bank is looking at. We get a lot of the unions negotiate at one time in March. We're seeing that. We're seeing the smaller companies. I'm seeing increases to hire young people, 40%. You heard me, 40%. That's pretty big numbers that they're talking. In Bitcoin, so this is really a difficult market to call right now. You held, as I said, all right? I saw a lot of people coming on going, this market's going a lot lower. And I was one that said no. I thought it was going to hold the key moving average, and it absolutely did. And now the question is, why is it going up? And that's what I'm trying to figure out. Part of it could be that Ethereum is it's got its filings, and that'll be the next thing that goes. We're not reading that flows are coming in to Bitcoin. So I'd be careful. Cash flows are not going there if you're keeping up with it. Then on the energies, you heard me talk about the fact that you've got to be watching what's going on in Venezuela. They are moving their soldiers. They are telling the big oil companies that are there, be careful. I'd be very cautious of you doing your drillings. This could be our oil, and problems are there. When you're broke, it's very easy to create another problem. It takes all the pressure off of you. But potentially hurt another 700,000 barrels a day. That's not bearish for oil. And you can see what the oil's doing. It's starting to come up. If it catches on fire, not a surprise if you try to get to the 90 level. And the Saudis are applauding like this. Yes, yes, yes. Fight, fight, fight. Get that price up so I can get my budget in order here. WTI, not as much, all right? Now the question is what's going to happen here? It's been a bear market rally back to the 18-day average, just what I said. This week will tell us a big part of the story, in my opinion. Heating oil. This is where heating oil normally gets strong. Now, the strangest thing, today, Friday, New York was warmer than Phoenix. Can you believe that? All right, Chicago setting records. We're in the mid-50s. Now, there'll be a cold front or two that comes in, but each day that goes by, Mother Nature, the sun is turning, the earth is shifting on its axis right here, and we're going to get into that other part where we're getting warmer. So these real cold days, and you can get a cold blast, they're not here to last. Soon, very soon, you'll be out of February into March, and that's your swing month. Remember that? Those April showers? There's a great song with all that. That'll be coming, all right? So there's poems about all this, but this is where you're at. But it is an unusual year, and that's what you've been getting with it. Something not unusual is you taking advantage of the offerings that we have, and I'd like you to do it. Just go to our website, iraepstein.com. Under free offerings, you get to choose from so much of what we have. The price counts. I recommend everybody try price counts. You will see it's about where a move might go. I'll give you an example. You're using this right now in the dollar index. I am. Where's cocoa going? You can use price counts to give you an idea of where they're going. Fourth, fifth counts, unusual counts. How do you know where they might stop? That's where these come in. A price count does not tell you to buy. A price count tells you once a move starts where it might go. Got that? And it tells you a definitive way where it ends. Very important. So you put this all together with all this. Take advantage of it. Just go to iraepstein.com. Under free offers, remove your cursor here, and I'll see you Monday morning. You have a great weekend.